All right, welcome to my weekly forecast video where I share what I anticipate to happen in the markets in the trading week that is about to begin. We are entering the fourth trading week of January 2025, which is incidentally not the last week because this year's January has 5 weeks. Now, let me make this full screen. Okay, let's start on the let's start on the economic calendar as we always do. So, what can we anticipate this week? Monday, January 20th does not have anything for us. Tuesday, January 21, claimant count change on the pound. Then on Tuesday, big one for New Zealand dollar CPI is coming out, but it will be coming out at the time that does not interest me. As you can see, 10:45 p.m. my time, which is UTC plus one. And so we'll see what New Zealand dollar does. Thursday has unemployment claims at 2:30 p.m. And then Friday has the Euro PMIs. I have quite an interesting story to tell with these PMIs where I think I have it in one of my videos where I was in a long trade, and I was in a bit of profit. French flash manufacturing PMI, I put my trade at break even because of the volatility that was coming in. French flash manufacturing PMI took me out, spiked down about 25 pips, took me out for break even. And then German flash manufacturing PMI spiked twice the range that French flash had spiked downwards to take me to what would have been my take profit, but I was out of the trade because of breaking in. And the lesson I learned from that at that point was, nothing, you don't know where they will go. French can spike up, German spikes down, or French spikes up, German continues that spikes even higher, or French spikes down, German spikes down as well. You don't really ever know what is going to happen when news releases are coming out. It might still do what you anticipate, but it may not do it in the way that you expect. It might wake you out before going in your direction, right? And so for day trades, like I always say, and this will be my plan, if I'm in a trade ahead of these landmines and that trade is in profit, let's say 1 hour, 1.5 hour, 2 hour, whatever it is, but it has not reached my profit target, before these news releases come out, I'm exiting my positions. I don't want to be just taking on a position at or between or shortly after these releases. So Friday morning, I don't want to be in a trade when these numbers come out. And so that's going to form the bulk of, and then of course later in the day there's US flash manufacturing PMI. Pound also has manufacturing PMI. So ideally, what I would want is for all my trading to have been done between Monday and Thursday. Don't want to be in the market on Friday. The only way I'm in a trade on Friday is if maybe I enter the trade Thursday, New York session, and it ends up running overnight, and then it hasn't hit profit by 9:15 a.m. on Friday when the first PMI number comes out. Wherever I am in that trade, 9 a.m. at the latest, I'm exiting. And so that's the game plan for the coming week. Let's go to the charts themselves, analyze them, and see what we'll be taking a look at. So, incidentally, I happen to have taken a look at the charts already. And so my analysis is pretty straightforward. I'll just run through it. Still bullish on the dollar and on the weekly. So this is this week's price action. On the euro dollar, we can see what has happened. Price traded below this low, tried to rally, found resistance somewhere up here in price, closed near the open of the week. So next week's candle can go anywhere. I'm open to taking longs, I'm open to taking shorts. But if we take a look at the immediately recent price action, one, no weekly fair value gaps. Okay, let's go down to the daily. No daily fair value gaps either. Okay, there's this, now that I think about it, wait a minute. There's this very small one. Oh my goodness, how did I miss that? You see why it's important to do these weekly forecasts and to plan. So, let me make that daily fair value gap. So in euro dollar, we can see that there's a tiny daily fair value gap that has been created, which might make for some short-term bullishness. The reason I like it even more is that we now have 3 daily lows sitting above it. Oh my goodness, that is so juicy. So this is what I'm looking at. Of course, this is the candle Wednesday's candle created, concluded the formation of the daily fair value gap. You can see that Thursday's candle traded, came very close to Wednesday's low. There's a reason for that. Rejected, traded higher. And then Friday's candle came very close as well. But you can see that these lows, 1, 2, 3, sitting right near each other. So somewhere on the lower time frame, this is looking like a trend line. And then there's a daily fair value gap sitting under it. So let me just set an alert here. What's this low? This low is 1.02589. So let me set an alert at 1.02588 or 87. Yeah, my perfectionism is not going to allow me to leave it at 587. 588. Let me edit that manually. 588. So 1 pipette below the low of the candle. So I know that price has indeed crossed it by the time, by the time we get there. Why isn't it saving? Anyway, so this is what I'm looking at on the euro. Let me get rid of this. This is no longer relevant. This is also no longer relevant. If at an optimal time, price takes out all these 3 lows and at the lower time frame, gives me a long entry, something like this, I'll look to take a short-term long trade to the upside. So targeting 3R as I tend to do. I did not think there was anything on the euro. As a matter of fact, I had only identified a potential trading opportunity on the pound on the weekly. So let's go to the pound now and see what we have. So on the weekly time frame again, we can see that on the pound, so this is the only trading opportunity that I had outlined so far. You can see that on the pound, this candle, and this candle have created this weekly fair value gap. I am still bullish. Long term, there is this low. You can see this low right here. You see, there's this low which can serve as a potential target. You see that this huge bearishness is likely to take out, this point of origin. So if this bearishness is going to continue, even if it might reverse, you will need potentially a significant liquidity pool. And what liquidity pool is more significant, than this one in the price action that has become relevant? So this is what I'm anticipating. I'm anticipating something like this. The week opens, price trades up, taps into the weekly fair value gap, then gives me some form of entry and goes lower. Of course, I'm a day trader, so I'm not interested in whatever. What's the range of this? What's the range of this? I'm not interested in capturing 266 pips. Definitely not. So all I'm looking for is a 3-hour trade in this direction. And if I get more opportunities as it goes down, I'll keep taking it. So I'm bearish until this objective is met. But the reason I will not mind taking that bullish trade that I have identified on the euro is because for this weekly fair value gap to get tapped into, what do we need to see? There's this bullish leg. So now on the pound, there are no points of interest from which the bullishness can begin. Of course, there's this candle, and then every other candle respecting this candle's low. So what will happen is that on the pound, and this is why it's important to know correlation, to know the assets that you trade, to look at everything that relates to what you trade so that you can do this intermarket analysis. On the pound, what may happen is that you will just suddenly see bullishness. You may not have tapped into any 4-hour fair value gap, might not have tapped into any daily fair value gap. Maybe to just take out a 4-hourly swing point, which will not constitute an entry for me based on my rules. But because I know on the euro dollar, let me go back to the euro dollar. But because I know on the euro dollar that there is a potential point from which that bullishness can begin, I will be able to take a long trade on the euro dollar. At that time, the pound might also be trading up, but it will be trading up without having given me an entry. And I'll take the entry on euro. And then what do we see? I am bearish, but there's no weekly fair value gap on euro. There's no daily fair value gap on euro. So what might happen is that maybe euro will just take out this high. Maybe this is what euro will do. Just take out this high, and then start trading bearishly. Now, there's no fair value gap, so that might not constitute a trade for me according to my rules. But at the point where it is taking out this swing point on euro, on the pound, it might be trading into a weekly fair value gap where I'll have more confidence. So that's the importance of intermarket analysis, understanding correlation and looking at multiple assets that relate to what you trade, so that if there is no trading opportunity on one, you might be able to spot it on the other. For example, this past week, all my trading opportunities presented themselves on the New Zealand dollar. Now, if I were only looking at euro and pound, I would not have identified any trading opportunity this week, as it were. So, short term bullish bias, as we can see here, but I'm more likely to execute that long trade on euro, and I'm more likely to take the short trade on the pound. So that's what I'm looking at. My alert has already been set there, as you can see. New Zealand dollar, there's pretty much nothing, right? So similar situation, New Zealand dollar might not be yielding anything, but you can see that everything seems to have been mitigated. Weekly fair value gap has been tapped into, 4-hour fair value gap here, tapped into, daily fair value gap here, tapped into, gave the reaction, rejected, tapped into this 4-hour fair value gap. So we don't really know what New Zealand dollar wants to do, but we don't care, because so if New Zealand dollar at the start of the week just starts trading bullishly, we'll know that it's because something has happened on euro dollar, and then that bullishness, can be sustained. And then if it suddenly starts trading bearishly, again, similar situation to what I said on the euro. Maybe as price is going to tap into that weekly level for me on pound, maybe all that will happen on New Zealand dollar is that price comes up to take out this point. And this is a data high. Data highs are swings in price that were created as the result of a news release. So this is CPI high. And a lot of the time, for experienced traders, if you hear traders talking about it, we know that price likes to take out data highs. Price likes to gravitate back to data highs because they're usually created because of a huge imbalance, a huge spike in momentum at a particular point in time. So even if price wants to continue trading lower, we might see this CPI high taken out before trading lower. So that's essentially my outlook for the week. Short-term bullish, then bearish if I can have price trade into. And you see it lines up perfectly with the dollar index. On the dollar index, you can see that there's this weekly level sitting below price, all of these weekly lows that can be taken out. So that short-term bullishness on those pairs will correspond to a short-term bearishness on the dollar. And then around the time when price is trading into my weekly level, probably on the pound, it would also be trading to this weekly level on the US dollar. And then as dollar returns bullish, pound will start trading bearish. So the analysis seems to align very well this week. Again, I don't like to analyze the DXY because whatever you see on euro pound or what you trade, it's like there's likely going to be some corresponding correlated price action on the dollar index. I just decided to take a look at it now. I can see that it lines up with what I'm anticipating. And so that's how I anticipate the market to move this week. That's how I'm planning to trade this week. We'll see if it pans out according to my plan. And of course, I'm prepared to adapt depending on what the market shows me.